Euro USD on the 4-hour time frame. Today is Friday, okay, and the time is 6:20 GMT. Now, I don't normally do this, but I'm going to do it for the example. Market closes in 3.5, 4 hours over here, right? And just for the sake of the setup, and I'm going to catch back up on this next week, I just want you to envision and imagine that it isn't really a Friday, just for the technical standpoint and the overview I'm going to give. Right, so today, look at the daily time frame first of all, and I'll explain why it looks like this soon. So yesterday we had a shooting star with a Maribozu there, okay, and a tweezer top from 2 weeks right there. Today we've opened and we spiked all the way up to highs 1.1220. Going down to the 4-hour time frame, yesterday's high, I'm going to mark it on. So we have yesterday's high just around here. And what we've had today is some news from the US. So as you can see here, red, 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 orange, high, 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 medium. Core retail sales come out for the US dollar at 1:30 p.m. and they all came out negative. Now that negative response caused a few of the majors to spike. Now the sudden spike went from 1.1150s say to 70 pip spike was caused. If we look at this on a 2-hour time frame, 2-hour time frame, you can see we've pierced right above yesterday's highs. We've actually came back down with a bearish engulfing on the 2-hour. However, with this setup, I was waiting for the 4-hour close. The 4-hour close happened 25 minutes ago. I was at the gym at the time. But this is a classic piece of manipulation where the markets use the news to spike straight through the prior day's high or low. In this case, it is the high. And then we've whipped straight back down. Imagine how many people would have seen the close of this bar and rushed in to click buy. Didn't even take out the prior highs of the previous candle. We've whipped straight back down. Now there's going to be so many traders in this bar. There's going to be so many buy orders in this bar, which are probably going to be holding their trade over the weekend now. So this is a short opportunity, and I'm going to put up the risk reward on this one. So more or less, I'm just going in from the bearish engulfing, knowing that this spike was manipulation straight through yesterday's daily highs. And I'm going to place my stop loss 20 pips above. So 1.1220, I'm going to go 1.1240, just above the daily area of resistance there as well. So I've got a nice barrier. Now my target for this one, I'm going to probably hold this into next week. So I'm short here. My stop loss is 73 pips. I want to go for around 100. I'm going to go back to maybe this daily support level here. Easy as that. So let's just stretch it to a 1 to 2 risk reward. So we've got 1 to 2. Come on. There we go. That's good enough for me. So I'm short Euro USD. I spotted the manipulation from the news that pierced the prior day's high. We whipped straight back down. I know there's going to be so many buyers in on that candle, rushing to take advantage of that negative, so-called negative news out of the US there, the negative figures. And we want to do the opposite of the majority. So short, stop loss 20 pips above the high of the wick there, because this is a bearish engulfing formation. It's a 1 to 2 risk reward. Targets at daily support, and also have weekly support near here as well. So this is going to go into next week. So let's see how this one plays out. Welcome back to the Euro USD. Now, unfortunately, as you can see, stop loss got absolutely battered. Not to worry though. So what actually went on here? Let's analyze. So 73 pips lost overall. Get my risk reward on this one. This is a 1 to 2 risk reward, risking 73 for 148, 150 per se. The reason for entering the trade was, in fact, yes, a spike above prior daily highs due to news. I was expecting a rollover because remember I did say this is maybe a risky trade because of the time and it's a Friday after news and so forth. But I still went ahead and did it. I'm trying to build up an archive here, but unfortunately I lost 73 pips, and this could potentially fall soon, the Euro USD, but let's see how it's looking to us on the daily time frame. Now, daily. So here was the day, right? So Euro USD at the moment on the daily time frame, the MAs are up. Okay, I did go against the MAs on the daily. The weekly haven't yet crossed. The monthly have crossed.
Ideally, we want the weekly and the daily to both cross each other. But what I can actually see here on the monthly, on last month's close, was in fact a 1, 2, 3 pin bullish reversal, and also a hammer candle is the third candle there too. The moving averages have in fact crossed over, and you can see here where it's reacted to the weekly support 1.0975. And again on this chart, sorry, I have gone in there and updated all of the different levels on there as well. So just bear that in mind. So EURUSD is looking slightly bullish to me right now, depending on the monthly close and so on. But right now I can see rejection, 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 3-pin formation. So that was the end of July. So for the start of August, really, it could have been a bullish sentiment overall. I did say I'm going to be going against the majority on this one. Not the majority, sorry, the overall sentiment. It was kind of 50-50. It wasn't as clear as, say, let's say the Aussie or the GBP USD chart. So this was stopped out similar to the Euro JPY example, which was also stopped out. So not had too much look on the Euro pair so far, but it's okay. It's okay. If you do get a weekly crossover there, that means the EURUSD falls in line on the monthly, weekly, and daily. But as I was doing analysis late last night, I did in fact catch onto a fib retracement. So we put it. So we have a pierce straight above the 61.8, and we pierce to the 78.6/79. I'm going to be looking at how tomorrow's candle forms. It's currently Wednesday, and at the time of this video, it is 20 to 7 p.m. GMT. If we do get some kind of dive back below the daily support, potentially may come resistance, and the 61.862 Fibonacci, I may start to look for short opportunities on this one once again, because Euro is extremely difficult to trade. And here, as you can see, we might be able to, I haven't actually tried this yet, but let's see how this goes. And we've also broke this trend line as well. So it is looking that there is potential upside coming on the Euro. It might be a little bit volatile and all over the place, but you know, learn from your loss, reanalyze the market, step back until something clear comes about. I'm not going to chase this. I'm just going to watch it. Maybe tomorrow or maybe Friday, a decent setup will line up for me. Who knows? So we've got the 4 hour here. Let's just go down one. Let's go to the 2 hour time frame to see how this is actually looking at the moment. So this huge spike here, this piercing. So let's see this. It's 1.1280, say, to 1.1. So this here was a 40 pip spike. Now, at the time of this, there was no news on. I was monitoring it afterwards. After I got my stop loss hit, I was monitoring this. So this actually went an extra 70-80 pips past my stop loss. Now there is potential we can get a crossover on the 2 hour time frame, and we can start to see some bearish momentum. As I say, I'm going to be watching the daily close today and tomorrow to see if I could potentially get a nice trade on this on the Friday, but I don't see any clear setup as of yet. So who knows? We'll see what happens. But unfortunately, that's just a standard loss. I was expecting maybe a downpour of the Euro this week after entering on Friday, but you live and learn. It's cool. It's only 73 pips. We'll make that by next trade. So that's that one, guys. Trying to be as realistic as possible. I'm not trying to sugarcoat anything. This happens in the market. You can have a great setup, all lines up, boom, you get stopped out. Okay, take your loss, keep your stop loss in place. Take the loss, do not rush in to enter. One tip, I may have mentioned this up to date on the course, but once you've had a win or loss on one currency pair that day, leave it alone. We go to the next one. So that's that, minus 73 pips.